Hey there, my name's Curtis Lucas, and you're watching Empire Building. This is going to be one part in a series of very quick videos where I'm going to address a number of questions I've been getting over and over again down in the comments. I want to make these videos searchable, so I'm going to stick to one topic per video. In this episode, we're going to be answering the question, is it too late to buy Mara shares? Or for that matter, in any cryptocurrency mining company. Obviously, the answer to that question might depend on when you're watching this video. But as of the date where I'm publishing it, we had another incredible run in the stock, pushing the stock upwards to around $17 a share. If you're watching this video 6 months from now, no doubt we are considerably higher than that. The problem is, right now we're dealing with an environment of investors who are not looking at the long term. They're analyzing charts with technical analysis and Fibonacci retracements and supports and resistances and a bunch of other things that don't mean anything at all. But the problem is there's nothing really on paper as far as a historical performance that we have to evaluate these companies. But fortunately for us, we do have math. And because Bitcoin is essentially a mathematical model, it is actually quite easy to predict price performance once you know the metrics of the miners and their performance that each company employs. This is why I'm most bullish on Riot and Mara, because they have honed in and exclusively been able to acquire the most efficient miners available on the market, produced by Bitmain, the S19 Pro. This miner produces the most hash rate for the least amount of power input. Now, these miners do go at a premium, but because both companies moved early, they were able to acquire those miners at a fraction of the cost that they're going for on the secondary market. So now that that part is done, we know that there's been a lot of dilution and they've raised a lot of money, but they've put that money to very good use, especially Mara. I expect Riot will follow suit, but Mara did beat them to the punch, adding an additional 75,000 miners to be delivered before the end of 2021. So the number you see thrown around a lot when dealing with trying to predict these future revenues is that they always state how much revenue they would collect if all these miners were deployed today at today's prices and today's network difficulty rate. And that sounds great, but of course these miners aren't here today. They're going to be coming throughout the entire year. And as they deploy those miners, the difficulty rate on the network will naturally increase, not just by how much they're installing, but also all of their competitors, which of course will increase that difficulty and in return lessen the amount of Bitcoin that they can collect. It doesn't matter how many miners hook up to the network, there's still only 900 Bitcoin produced day by day. But that is only one side of the story. We know that difficulty will increase. But if you're bullish and you believe in this technology, you also know that price will increase. So while they may be getting less Bitcoin for their work, but they could still be getting a whole lot more dollars as a result. Here's the best way to visualize this. The difficulty rate on the Bitcoin network today is a result of all the miners that have been deployed over the previous 12 years of Bitcoin's life. Now, obviously, all the miners that are currently hashing on the network were most likely not around during that first 5 or so, maybe even longer years of Bitcoin's existence. But still, the reality is, if you want to double the hash rate available on the market, then you have to reproduce the equivalent power and deploy everything that has been deployed on the network to date. That is a monumental task. It doesn't just involve producing and distributing those miners, I mean the actual hardware. It also involves securing real estate and facilities, building those out and connecting these all up and sourcing that kind of power. It is much harder than people might realize to do it at scale. As a result, the hash rate can only climb so fast. There's too many logistics involved in actually deploying these kinds of miners at scale. Price can rise much faster than that. You only need to look at every bull market in the past to see how relevant this is. During the 2017 bull market, from January 1 to December 31st, the difficulty rate climbed about 6.5 times from where it started at the beginning of the year. yet the price increased 20-fold. By the end of that year, you could mine it with your home PC and still be profitable. At today's difficulty rate, I believe the cost per Bitcoin for both Riot and Mar is somewhere in the vicinity of $3,000 to $4,000 per coin. So even with a 6-fold increase in the difficulty rate, that would only push their cost per Bitcoin up to somewhere around $18,000 to $24,000 by, say, the end of the year, assuming that kind of parabolic growth. And it is still difficult to say whether or not these mining chip manufacturers can actually meet that level of demand. But as I just said, it won't just be those miners adding to the difficulty rate. As Bitcoin's price continues to climb, it'll become profitable for even home PCs to enter the game, which obviously can nowhere near compete with these machines. But when you know at home you can turn on your computer when you're not using it and mine some Bitcoin with it for cheaper than you can buy it on the market, why wouldn't you? But even with that, which also happened during the 2017 bull run, it just can't compete with how fast the price can rise. So going back to the metric that we're using to forecast future profits, when measured in US dollars, even using today's profit metrics, it is still a conservative way of doing so. And the price would have to drop a long way down for these miners to no longer be profitable. I don't think you can even look to the last bear market to determine how effective these miners will actually become. These miners were just getting started at the end of the last run. It took until now for them to finally start to scale up, but they chose exactly the right time to do it. The good news is that you can do this math at any time. As it stands right now, Mar has already published what their results would be if all miners were available today, which put it somewhere around $530 million annually on an annual basis. So when I look at that and divide those kind of earnings by the number of shares available, as in the total number of outstanding shares, which just climbed to around 74 million. Last time I did this math, it was somewhere around $7 a share. If you assign the company even a very basic S&P 500 PE ratio of, say, 32, suddenly you get a per share price of over 200. This is not hard to fathom when you consider companies like Nikola, which didn't even produce or sell any products, could be valued over $20 billion. And they had revenues of zero. But again, the problem is none of this has hit paper yet, and nobody, I think, has done the math. But once it does hit paper, the floodgates are gonna open. But what do I know? Maybe the market will disagree with me. Maybe they don't think these companies are worth that kind of PE ratio. But if I've learned anything from the past, I believe that will actually be true, because the market will decide these PE ratios should be much higher. Tesla's got a forward PE ratio of well over 200. What do you think the market might decide a Bitcoin mining company producing somewhere between 500 million and $1 billion annually might be worth? I can't answer that, but at these prices, I sleep like a baby staying in this market. And because of that, I see no reason to be trading these things. But you also need to decide that for yourself. So as I've consistently mentioned, the best strategy that you could employ while trying to enter into these stocks is to cost average and spread yourself out. Don't buy one stock and don't buy it all at once. Just because the math indicates that these stocks should be worth a lot more does not mean they won't crash tomorrow. So pace yourselves, and once you are in, you can continue to cost average throughout the year, but in my opinion, don't try to get fancy. Let the herd run around. You're better off standing still and enjoying the bumpy ride to the top. That's all for this one. Now let's get back to empire building. Bye.